Okay, good morning, everybody. Thank you for joining us in what is our now 8th installment of the Prestige COVID series of webinars. This is our opportunity to really help out everyone on this call to provide those steps in guiding yourselves and your business and your employees through everything that the coronavirus has thrown at us over the past few months here. So, my name is Jason Flynn, and I am the Director of Human Resources and Client Services here at Prestige Employee Administrators. Along with me again this morning is Carol Sawyer, who is our Tax Manager. It's also nice to have Andy Lubash join us again. As I mentioned in the past when he's joined us, you know that Andy has been involved with NAPEO for the past 5 years and is their current chair. He is also the principal of Prestige. And for the first time today, we'd like to introduce Seth Peretta, who is a principal at the Groom Law Group today. So as for today's agenda, Andrew and Seth are going to be kicking off things this morning with some legal updates. Seth will specifically be getting into some updates on the Paycheck Protection Program loan forgiveness process, regarding what has changed and to provide an overview on what businesses can expect as they begin the application process. Then Carol will be taking over and provide some guidance on the loan forgiveness application reports. Finally, we'll circle back to the return to work topic that I've touched on for the past couple weeks, where I will provide some guidance on a detailed process that we've put together for employees to follow when looking to bring back their employees. As a reminder, all participants will be muted throughout the webinar. However, if you do have a question, as always, I urge you to use the Q&A feature within the webinar and direct the questions to the panelists. We will do our best to answer all the questions that come in from the participants or the attendees. Also, a copy of the presentation will be available in the COVID-19 Resource Center of the Prestige website following the webinar. At this point, I'm truly happy to introduce Andy Lubash, who is going to say a few words and take it from here. You're on, Andy.
All right. Again, welcome everybody. Thank you for attending our series of Wednesday webinars. As I said, everyone, it feels like an episode of the movie Groundhog Day. But again, eventually this week we really were going to be starting with the back to work, but finally we got guidance on the PPP forgiveness. And I know that was about 3 to 4 weeks behind schedule because behind closed doors there was a lot of bipartisan bickering. But again, they did arrive at a set of FAQs and guidance that we all must follow, a little bit different than some of what we expected. So again, pay close attention because this is, again, probably one of the more popular topics and one of the more critical things that we need to pay attention to at this point, because this is pretty complex, more complex, I think, than any of us actually thought. And again, the one thing I want to reiterate is that we are here at Prestige to assist you. Again, Seth is going to go through this, and I've seen Seth. I vetted this beforehand. The first vetting, Seth went through this for an hour and a half. Okay, so that just gives you how much material there is, and then was doing another hour and a half. So by limiting him to about 30 to 45 minutes, we're definitely going to cover the basics. You'll see, again, the forms, how to fill them out, the reports you need. He'll talk about, believe it or not, we have to hold some of this documentation for 6 years, which is not something a lot of us saw coming. I've known Seth for, let's say, I've been part of NAPEO for 21 years, involved as chairman of state government affairs and so forth for about 10, chairman this year. But again, I've known Seth for probably at least half the time. Seth is our go-to guy. I think you're going to be very impressed by his presentation, his depth of knowledge. He is available to us through Prestige, so if you have a question that we can't answer, we go to Seth. Seth is located as a principal at the Groom Law Firm in Washington, D.C., is totally plugged in to what is going on. Seth knows what's happening before it happens. Okay, so that's one of the reasons we're able to find out what happens before it happens. So as opposed to hogging up the rest of his time, okay, because this is stuff you all want to see, I'm going to step aside so they can put me on mute, which is going to raise a lot of applause. But again, thank you. Again, we are here. Again, as each webinar, I've let everyone know. Again, to get in touch with me, you can call me directly. Some of you have taken advantage of that. Again, my cell is 516-680-5021. Direct line to my office is 917-258-0223. And you can reach me at alubash, A-L-U-B-A-S-H, at PrestigePEO.com. So again, if you have questions, you need any sort of assistance, something is not getting back or whatever it may, I am here. Our team is here for you. So, Jason, you're going to be able to mute me, and we'll start with Seth. So, Seth, you're on.
Thank you very much, Andy, for the kind introduction. As we're going to do today, we're going to begin the process of sort of talking about the forgiveness loan application. And if we can move to the next slide here, we'll sort of lay out what we're trying to accomplish here today. Effectively, what we want to be able to talk about today is what are the actual components of the loan application. We're also going to want to talk about sort of what supporting documentation may need to be provided. And as Andy mentioned, some of these documents will need to be retained for 6 years. We're also going to talk about how to sort of complete the application and determine eligible payroll and non-payroll expenses. This is going to be a very significant endeavor for you all when you start to complete your forgiveness applications. If you thought completing the PPP loan application was challenging, this is going to be even more challenging. And to aid in that process, what we are planning to do is over the next 3 weeks, baked into sort of 30-minute increments, we are going to use a case study to show how we move from start to finish, where we actually are going to complete an application for a hypothetical company called ActMeCo. And I'll mention it again at the end, but what's really important is that you understand that there's no rush to seeking forgiveness of your loan amounts. Unlike with the PPP loan application itself, where there was the reality that if you didn't get your application in fast enough, you might not get an actual loan. The ability to get the amounts forgiven has nothing to do with how fast you get your application in. And as we'll talk about, there are a fair number of decision points. There's going to be data you need to create with, the assistance of Prestige, and I think that's where Carol's going to talk about that after me. It's really going to be more sort of slow and steady wins the race. Like there's no benefit in being the hare. You want to be the tortoise. You want to be careful and diligent, and there's going to be situations where you might want to look at different possible decision points to figure out what might allow you to maximize your forgivable amount. So while there's been a lot of hysteria around the PPP loan program and being super duper fast, rest assured there's no race here you need to engage in. It's really it's more like a marathon than a sprint. And you want to pace yourself as you move through the process. All right, so moving to the next slide here. All right, the application has 4 sort of express components, but as we'll talk about, there's a lot more that's going to go into your application. There is the actual PPP loan forgiveness calculation form. That's item number 1, and it's sort of 2 pages long. First page is actual sort of borrower information on the loan and how you use the loan, and then page 2 is a series of attestations. You may remember when you did the loan application, you had to make attestations about a host of things, such as, the uncertainty of the pandemic makes the loan necessary. A similar set of attestations are on this document as well. But before you can get to the form, you've got to complete the Schedule A, which will also be submitted. Both items 1 and 2 are submitted. And Schedule A is a 1-page form, very similar to like when you complete a 1040, you have maybe a Schedule A that's 1040. But before you can get to the Schedule A, you have to complete the worksheet. And as we'll talk about, lenders can use a different sheet if they want. So before you ever start completing the Schedule A worksheet, you'll want to talk to your lender to make sure that they're not using their own form, because they might ask for different information or variations of information. So before you begin to collect all the necessary payroll and employment data to complete the worksheet, check with your lender first to make sure they're going to be using this Schedule A worksheet as provided by SBA and Treasury. Now, while the worksheet won't be actually submitted, it will be retained. You must retain it for 6 years. There is a fourth component to the application, which is an optional sort of demographic information form. Basically, you just sort of describe who you are as a borrower. It is optional. We're not going to talk about it. For purposes of actually getting your amounts forgiven, you're really going to be focusing on items 1, 2, and 3 here as reflected on this page. Now, one other thing I'm going to highlight, because it's going to be relevant as we talk today. If you look at that third document, which is the worksheet, there are 2 tables on that worksheet, Table 1 and Table 2. In order to complete those tables, you're going to have to make certain decisions, and you're going to have to collect a series of information in order to even get to be able to complete those tables on that worksheet. And so as we move through our case study in the next several weeks, we're going to be sort of actually preparing the data and information necessary to complete those tables. Those tables are incredibly important for actually arriving at the right numbers, and we're going to talk about how to do that. Okay, moving to the next slide. All right, so one thing to keep in mind here, and you may have heard about this on previous webinars, perhaps from my colleague Malcolm Slee or others, the borrowers who have received PPP loans in excess of $2 million will be required to check a box on the actual application form itself. Now, when you're looking at that $2 million threshold, it takes into consideration loans received by affiliates. So if you're a brother-sister company, say under a holding company, and Company A received $1.2 million of PPP loans and Company B received $1 million, right? Even though each of them by themselves did not hit the $2 million threshold, because they're affiliates for purposes of the SBA rules, you're going to be sort of summing those 2 loans together to determine whether you have to check the box. And in our situation, right, we have 1.2 million and 1 million, we're at 2.2. So both companies, when they submit their own loan forgiveness application, will have to check that box. What that box is likely to do is that's going to be what drives audit activity. They have indicated that all entities that receive $2 million of PPP loans across themselves and their affiliates will be subject to a mandatory audit. So obviously, if you think you've got to check that box, you might want to just make double sure, because checking that box will certainly, at least as communicated by Treasury SBA, result in an audit. Now, that doesn't mean that if you got less than a $2 million PPP loan across your affiliates that they're not going to audit you. We are expecting some pretty robust audit activity. So you won't need to necessarily check the box, but just be clear that we do expect audit and enforcement. So be careful as you fill out your loan forgiveness application. One thing to note here is in our hypothetical, we had the 2 companies, Company A and B, were at $2.2 million. There was some thought that, Company A, for example, could pay back $201,000 of its loan, so that, it's really only in the aggregate at $1,999,000. Unfortunately, that approach does not appear that it will work, because if you look at the instructions, you're looking at the original disbursement amount for determining whether that $2 million threshold has been crossed. Okay, moving on now to the next slide. All right, so as we mentioned, there is the Schedule A, and that's the form to the right. And that's going to be really important. That's where all sort of the important numbers are reflected that get sort of transposed onto your actual loan application form. But before you can complete the loan application, before you can even complete Schedule A, as I mentioned, you have to complete the Schedule A worksheet or the lender's equivalent. So as mentioned, do check with your lender to determine whether they're going to be using the Schedule A worksheet provided by SBA and Treasury or whether they're going to be using their own form. As I mentioned, there's Table 1 and Table 2. And what Table 1 and Table 2 look at are effectively, you're going to be listing in Table 1 people that were employed even for 1 minute during a relevant covered period. And that's generally, we're going to talk about that. The default is it's the 8-week or 56-day period that begins on the date you received the disbursement of the loan. So if you were going to use that period, you're going to be looking at who you employed during that 56-day period, and you're going to be deciding whether they go in Table 1 and Table 2. What's interesting is the only thing that matters for figuring out whether they're in Table 1 or Table 2 is whether or, well, I guess there's two things, is whether or not they had an excess of $100,000 of annual comp in 2019, which I know sounds a little bit weird. But so if someone had $120,000 of annualized comp in 19, but you reduced their hours by 50%, and let's say they're only slated to have $60,000, because they had more than $100,000 of annual comp in 19, they go in Table 2. Basically, everyone else is going to go in Table 1. The one thing to keep in mind, and we're going to walk through all of this in our case study over the next several weeks, so don't panic if this is, you know, a lot of information. Just want to sort of highlight some things to think about. Is if you're an owner employee, a self-employed person, or a general partner, those folks are not listed in Table 1 or Table 2. They'll be reflected somewhere else in completing this application. As we'll talk about on the next couple slides, the instructions to the loan application provide for an alternative. So, right, many folks may use a weekly or a biweekly pay period process rather than, say, a monthly. What the instructions say is that if the borrower uses a payroll period that is at least as frequent as biweekly, so presumably that means weekly or biweekly or every 2 weeks, then they can use what is called the alternative covered period for purposes of basically completing Tables 1 and Table 2. And what that alternative period is it's the first day of the first payroll period beginning after your loan disbursement date. So that's going to be really helpful because it's going to make it much easier to collect the data and to calculate it because it's going to be going off of your actual payroll period. The other interesting thing is that in defining eligible cash comp, they're going to let you pick up not only the amounts that were incurred during that 56-day period, so long as paid, you know, by the you know, in ordinary course, shall we say, but also the amounts paid. So, for example, if your loan disbursement date is April 15th, but your first payroll period that begins next is April 19th, and you end up paying amounts on April 19th or thereafter for services rendered prior to April 19th, you'll still be able to count those for purposes of forgiveness. So that's a pretty good thing. The other thing I want to highlight about this worksheet is at the bottom, and you know it's in pretty small font there, my apologies, is it talks about the FTE safe harbor reduction. Your forgivable amount is going to be generally capped. Well, in order to determine your forgivable amount, I'm going to give you the very general rules, which is that 75% of what you can have forgiven must be comprised of eligible payroll costs, which is going to be certain cash comp and certain non-cash comp. So if you have a $100 loan, only at least $75 has to be based on those payroll costs. If you only use, say, $60 on those eligible payroll costs, then you won't be able to forgive the full 100, right? Because 60 will now need to be equivalent of 75% of your forgivable amount. So let's say you spent $76 in eligible payroll costs. In theory, your full amount can be forgiven. But there are two ways that your loan will be reduced. One is if you reduce headcount, and that's the FTE reduction. And the second one is by reducing certain salary and hourly wages, you'll see there at the bottom of that worksheet is something called the safe harbor, the FTE reduction safe harbor. We're going to talk about that in a little bit. All right, so moving on. All right, so as I mentioned, we are going to do a case study over the beginning next week, and it'll be a 3-week series. And again, don't panic, no rush. As we'll even talk about, there may be value in waiting until June 30th to begin the process of actually completing your application, because there's certain reasons why you may want to wait that long. So again, I know you're excited to get your amounts forgiven, but don't panic. Let's be cautious and careful, and we'll, over the next several weeks, work on providing you the information and the sort of the experience of running through a case study so that you'll be positioned to perhaps do this on your own with the assistance of, say, Prestige or your accountant, et cetera. Very, very quickly, the case study we're going to talk about involves Acme Co. As I've talked about, there's an owner-employee, Burks in stock. As mentioned, since she's an employee, she won't be in either Table 1 or Table 2 of the worksheet. There are several employees, Paul P. Phillips, coronavirus, Sao Chi, Noah Swab, and serology. You know, one thing that's going to be important as we talk through our case study here is that serology was termed on 4/1 of 20. And as we think about which covered period to use for purposes of looking at the full-time employee and the reduction sort of factor, it's going to be important to think about who were your employees when did people come and go, and so you may be better off picking the default versus the alternative payroll period or vice versa. Similarly, when you do your FTE headcount reduction comparison, you're going to be looking back in time. And there's 2 different periods of time that you can use. And so you're going to want to think which one gives you a better result. So there's going to be some decision points, and we'll talk about those as well in a couple seconds. In our case study, the loan amount was $90,000, disbursement date was April 15th, and payroll period was biweekly. So as we'll talk about in our case study beginning next week, is Acme Co ends up using the alternative payroll covered period because they pay biweekly, which makes them eligible, and they want to line the data up with their payroll period process. So we'll walk through all of this in the context of Acme Co. And I hope it will be very helpful for folks in arriving at how to complete the application. All right, next slide. All right, so as we mentioned, there will be certain documentation that must be submitted in support of your Schedule A. Much of this will be information that actually you need to complete the worksheet. And so what we've done here is we've laid out on this slide, pulled directly from the instructions, sort of what is the information that you're going to actually have to submit with those 3 components, right? Document 1, 2, and 3 from that earlier slide. And basically for payroll, they're going to be looking for either bank account statements or third-party payroll service providers that document cash comp paid to employees. They might also be looking for tax forms or equivalent third-party service provider reports for that relevant 8-week period, whether it's the default covered period or that alternative payroll covered period. And then for purposes of non-cash comp, which looks at things like employer contributions to medical, dental, vision, employer match maybe to an FSA, they're going to look for payment receipts, canceled checks, or account statements. Similarly, they'll be looking for the same thing with respect to perhaps retirement plan contributions. So they're going to want basically documentation to indicate that both that cash comp and that non-cash comp was incurred and or paid as appropriate. There's also some non-payroll information that is eligible for purposes of forgiveness. That would be qualifying business mortgage interest payments. And there they've indicated they'll want a copy of lender amortization schedule, as well as receipts or canceled checks verifying that those eligible payments were made. You can also get amounts forgiven for business rent or lease payments. There they'll need you to submit a copy of the current lease agreement and receipts of canceled checks for those rent payments or lease payments. And then for business utility payments, you're going to want copies of invoices and canceled checks or account statements, et cetera, showing those payments were made. Now, we don't have a ton of additional detail at this point on, for example, what qualifies as a business utility. There's some reference to transportation utility costs, but nobody really knows what that means. So we expect that over the next several weeks, we will continue to receive additional guidance that will help us understand what types of expenses may be eligible or not under some of that non-payroll category. Lastly, as I mentioned, one way that they will potentially reduce your forgivable amount is the extent to which you had a reduction in headcount based on your number of full-time equivalent employees. And for purposes of the FTE reduction factor, they use a full-time employee definition of 40 hours per week. That's either paid or non-paid. I think there's been some sort of, there's been some confusion around the idea, it's either paid or worked, meaning if you paid for it and they didn't work, that still is treated effectively as if they were, quote, working. And that's one of the reasons is that you can use the payroll, the PPP loan, to pay employees to not work. There's been a lot of confusion, I think, around when you can use those payroll PPP loan proceeds, but they're absolutely intended to bridge people between now and when you can actually get them back to work. So when they look at who is a full-time employee, it's someone who worked 40 hours a week or worked and was paid 40 hours a week or was just paid 40 hours a week. But as I mentioned, when you calculate your FTE reduction headcount, they're going to want various information to support both that you employed these people and or that they were paid for services, whether they were rendered or not. All right, moving on to the next slide. In addition to the having to submit documentation in support really of that Schedule A, you're going to need to retain a series of documents. Even though, as I mentioned, the worksheet or the lender's equivalent is not submitted to Treasury SBA, you need to retain that for 6 years. You're also going to need to retain documentation basically supporting the calculations that you end up reflecting in Worksheet Table 1 and Worksheet Table 2. And then as we'll talk about during our case study example the next several weeks, let's say I reduced headcount by 2 full-time equivalents, but it wasn't my fault. I made an offer. I tried to rehire someone back, and they didn't take it. They didn't accept my offer of rehire. Or I had to fire them for cause, or they voluntarily resigned. Or let's say that because the employee's childcare was closed because of COVID, they asked for a voluntary reduction in hours. Well, the great news is that for purposes of that FTE reduction factor, the instructions allow you to effectively claim an exception for situations where you made a good faith offer of employment and it was turned down, if you fire someone for cause, if somebody voluntarily resigns, or if they ask for a reduction in schedule. So to the extent you have documentation supporting the job offer refusal by the individual, firing for cause, voluntary resignations, or a request by an employee to reduce their hours, if you are going to claim those exceptions as part of the loan forgiveness application to try to maximize your forgiveness amount, you will need to retain any documentation. So that's the next thing there. And then obviously documentation supporting the FTE reduction safe harbor, which is similar to what I just mentioned, but that's going to be basically a more complicated calculation that looks at sort of how your employment characteristics trended over time between February 15th perhaps and June 30th of this year. But there'll be a material amount of information you must retain, and generally it's going to be for 6 years, which really is the outside limit of the period of time during which Treasury and the SBA can assess interest and penalties. So thus you can see the reference to 6 years. Okay, moving on to the next slide. All right, in addition to what I just mentioned, there is a series of other materials that will be need to retain for 6 years. The last thing, of course, on this slide I want to highlight here is that the borrower must permit authorized representatives of SBA, including representatives of the Office of Inspector General, to access these files. So effectively, you can't claim privilege or you can't claim confidentiality. If you're seeking forgiveness, you are agreeing to allow these documents to be audited and reviewed by the SBA, including the OIG. So just be aware of that as well. And as you think about that, you know, there's always value in thinking about what those informations look like, how the information is presented, and making sure that what you have in those files that you're keeping for 6 years in the event of audit or enforcement, you know, are thoughtful and deliberate, shall we say. Okay, moving on to our next slide. As I mentioned, in order to complete those 2 tables on the worksheet to the Schedule A, you are going to need a lot of employment data and detail just to even begin to complete that worksheet. And this is where your partnership with Prestige can come in handy, as well as perhaps if you have an individual accountant, et cetera. But here is some of the additional employment data and detail that will be needed. And again, as we walk through our case study, we're gonna actually dig into each of these bullets. So don't panic if you're not following all of this. We're gonna, in wonderful, granular, painful, but wonderful detail, we're gonna walk through each of this as part of our case study over the next 3 weeks. You'll need annualized 2019 compensation, right? As I mentioned, that's going to determine whether they're listed on Table 1 or Table 2. You're going to need the hours worked and paid data, right? Now, that's going to be important for several reasons, right? If you're using that default covered period, i.e. the 56-day period after the loan disbursement date, you're going to need the hours worked and the paid data for that 56-day period. If you pick the alternative payroll covered period, it's going to be that period. As I mentioned, for purposes of the FTE reduction factor, you're going to look back in time to a historical reference period, and you can pick either February 15th of 19 to June 30th of 19, or you can basically pick the first 2 months of 2020. But you're going to need the hours worked and paid data for whichever historical reference period you're using on your application. And then, as I mentioned, there's also this FTE reduction safe harbor that you can try to claim. Now, if you do that, you're going to need the same hours worked and paid data for a different period of time, God love them, which is February 15th of 2020 to April 26th of 2020. So as you can see here, there's a fair amount of hours worked paid data that you're going to have and collect and then calculate in order to be able to sort of complete that initial worksheet. As I mentioned, you're also going to need the cash and the non-cash comp amounts that were paid to the employees during whichever period sort of we're looking at. So that's going to pick up both cash comp and its gross cash comp, but also certain non-cash comp, specifically employer contributions to qualifying retirement or health benefits. And then, as I mentioned, if you want to try to claim the FTE reduction safe harbor, the exception that would help reduce the extent of any reduction in the forgivable amount based on a reduction in headcount, you're going to need to be able to report and collect information related to rehire offers, misconduct terms, voluntary resignations, and requests for reduced hours. So even before you get to that Schedule A worksheet, there's a bunch of sort of preliminary work that we'll want to do. Okay, moving to the next slide. As I mentioned, there are some business expense data that you will need to complete the application. That's certainly if you're seeking to, maximize your forgivable amount. Now, as mentioned, these business expenses can only equal 25% of the forgivable amount. So remember, if we had a $100 loan, no more than $25 could be attributable to these business expenses here. But so if you're going to try to seek to maximize your forgivable amount, you're going to have to be collecting and determining your qualifying business mortgage interest expenses, rent and lease expenses, and utility expenses during the default covered period. One thing to note here is that while they do allow you to use the alternative covered period, which is that first payroll period beginning after the loan, if you pay at least biweekly or more frequently, you can use that for purposes of your payroll cost expenses. You can't use an alternative period for looking at the business expense. You're going to be using that 56-day period that begins on the date of the loan disbursement. Okay, moving to the next slide. There will be a series of decision points that you will need to make in order to complete your application. Like, unless you figure out what the answer is to these questions, you will not be able to complete your application. So that first one is whether you're going to use that default period or the alternative covered payroll period for purposes of looking at payroll costs, both cash and non-cash compensation. And you might be better off using one period versus the other, so you may want to think about that before you make the decision. Same thing with that historical reference period. If you're looking at how your FTE headcount was during the alternative covered payroll period, you need to pick the historical period, and you have two choices: going way back into 2019 or looking at the first 2 months of 2020. Well, if you're like a typical company and you are hiring more people as each year went by, you might have had a lower FTE or headcount in February 15th of 19. So you might be better off using that 2019 historical reference period than, say, the 2020 historical reference period. On the other hand, if because of a sale of a part of your business or a reduction in force that happened at the end of 19, you might be better off using that 2020 historical reference period. But certainly being smart and thoughtful and looking at and potentially comparing data will be important to figuring out which period to use. And as I mentioned, don't rush to complete your loan forgiveness application, especially if you've had any reduction in headcount relative to that historical reference period. And that is because the rules allow you to basically claim the FTE safe harbor reduction if you are able to get your FTE headcount back up to where it was as of June 30th. So if as of June 30th you go and you hire people because people are back to work, et cetera, and you're able to get your FTE headcount up, it may reduce the extent of any reduction. So, the other thing to keep in mind is that to the extent you get amounts forgiven, the interest that would be accruing, mind you, at no more than 1%, would also be forgiven. So, there probably is some value in waiting till after June 30th if you think you might be subject to an FTE reduction safe harbor or FTE reduction, if you think you'll be able to claim the safe harbor, if you think you're going to get your headcount levels back up to sort of where they were pre-pandemic. Okay, next slide. And we're getting to the end, so appreciate your sticking with me here. This is the last slide here. Additional things to keep in mind. I'll say it, I said it once or twice or three times, I'll say it again. There's no need to rush your PPP loan forgiveness application. There's no expiration date. There's no race to the dollar. Like the saying goes, slow and steady wins the race. Keep in mind, the process of completing your application will be time intensive. It will require you to work with Prestige and probably your accountant to collect all the necessary payroll, employment, and business expense data. So prepare yourself. It's like I said, really beginning a marathon. You pace yourself, you get your rest, you cargo load, and then you dig in. Before starting the worksheet for the Schedule A, make sure your lender is not going to require use of a different form, because they may be asking for slightly different information, and you don't want to collect all this information twice. you should expect that the lender may request additional and supporting detail. This is one of the frustrating things we've seen just as part of the general application process on the front end to get the loan, is that sometimes the lenders, as part of their own underwriting principles or based on rules that they believe they're subject to, whether it be banking laws, et cetera, sometimes they've been asking for additional detail than is otherwise required by the program. Always make sure when you're collecting and reporting the data that you're looking at the relevant time period. There are a lot of time periods to consider here, and different ones apply for different purposes. And so you got to make sure you're looking at the right time period in order to make sure you're actually collecting the right data and putting the right numbers on the forms that lead to the decision around what amount is forgivable. And lastly, and I can tell you this from personal experience and having created our case study, check your math. There are things that are sort of not intuitive, like when you're subject to a reduction for reducing salary or wages, it's only on the amount of the reduction that exceeds 25%. So if I had someone making $1,000 a week and they ended up, because of a reduction in hours, only making $700 a week, the reduction would not be the full $300. It would really just be the delta between $750 and $700, right? Because it's just the reduction in excess of 25%. And so some of those number calculations can get quite mind-boggling as you start to work through them in reality. So always check your math. But look forward to working with you guys over the next several weeks. Alexander Pope, I thought, great quote for us today: to err is human, to forgive is divine. I think it's quite apt, obviously, here as we seek to maximize our PPP forgivable amounts. So with that, I'll turn it back to Jason and to Carol.
Thank you, Seth. Really appreciate you going through this loan application or loan forgiveness paperwork process. I know it's something that we're going to be talking more and more about over the next few weeks. As you mentioned, Prestige is always here to help out our clients through this process, but definitely strongly appreciate your input on this. So thank you. Right now, what I'd like to do is to pass the microphone over to Carol, who's going to talk a little bit about loan forgiveness reports.
All right. Good morning, everybody. My part will be brief because Seth is the expert and he's going to, over the next couple of weeks, really go through the nitty-gritty. But what I wanted to do was to let you know that we will have you covered in this. Just as we have been giving you reports up until now, we will continue to do that. There we go. All right. First of all, the FTE calculation report that we have generated for all of you for your look-back periods, that has been, hold on just a moment. We're having a little bit of technical difficulties, but I can keep talking at this point. When you get a chance to look at the forgiveness application, you will see that SBA has redefined how to calculate the FTEs for the 8-week covered period, and therefore we need to take that same logic and recalculate for your two choice look-back periods. I think, yes, there we go. Okay, so we have rewritten the report. We did go through it last night to update the logic in that report. We will work on getting those new reports out to you. I believe when I looked at the math, it lowers your FTE just a little bit. But this way, we will have reports that match. So when we run it for your 8-week covered period, it will have the same math as it did for your look-back periods. And then we are working on a series of reports regarding the Schedule A and the Schedule A worksheets. We will be giving you a Table 1 and Table 2 for the compensation paid and for the FTEs. Salary reduction, which is a column in Table 1, is a little trickier, so we're working on that. But I think, as you all know, that as you've gone through this process so far, we're with you every step of the way answering your questions. We will give you the information on Schedule A for lines 6, 7, 8, and also for line 9, which gets you all the way through. Obviously, rent and utilities and some of those other outside costs are something that only you have the information for. If you have an outside 401k, you will need to add that information for lines 6, 7, and 8. So that's where we stand. So just wanted to confirm that we're aware of everything that Seth is teaching you and developing what you will need as a Prestige client to get you through this process. And that is it for me this week. Sorry, no math this week, folks. Seth will be putting you through the math ringer the next couple of weeks, and so I'll turn this back over to Jason.
Thank you. I know we all did miss the math, but we are looking forward to future math. That being said, as we wrap up, I do want to touch on a few points about return to work. That is the other big hurdle that we are currently working through and trying to hop over. So as you know, for the past couple of weeks, we've been talking about the return to work process. Specifically, last week I took everyone through what our return to work process looks like, what's entailed, what our guidance is going to be, what we're putting together, and ultimately what employers will need to do in order to prepare to bring your employees back to work. So I am happy to say that the return to work packet has been finalized, and it has been posted to our COVID-19 Resource Center on the Prestige website. The information for the return to work process has also been emailed out to each client individually. So I'm going to take everyone through that process now. However, if you did not receive that email with those links and that information from Prestige regarding the return to work process, you can, again, visit the Prestige website to directly download that information, or you can reach out to your HR business partner to obtain that documentation as well. So you're covered on a couple of different fronts. So let's get to the return to work packet and what has been created for you. As we've discussed, the details of each employer's plan to return to work will look different, but there are a number of key issues that most will need to understand and start preparing for at this very moment, hopefully prior to this. This packet does a lot of the heavy lifting for you. It also provides a step-by-step guideline on the processes and the procedures that you can put in place. So again, we put in the work in the back end so that you did not have to do most of that heavy lifting on your end. That being said, it will still require work to put the plan in place. So some of the key areas that you will find included in this process in this packet, specifically in the return to work checklist, is workplace safety, right? This should be considered by addressing areas such as social distancing measures, personal protective equipment, business travel, dealing with visitors, things of that nature. Obviously, there are other things that fall in place under workplace safety as well. Then we have recalling employees and your internal communications that you put in place. These instructions are going to provide details on how and when to bring employees back to the workplace, what you as the employer need to consider during that process, and also how to properly communicate with employees internally to solidify the procedures moving forward. We certainly want it to be clear. We want employees to be comfortable, and communicating with them is the easiest and most effective way to do that. Employees should definitely be notified in writing if there will be any changes in pay, and that there may be a need to create or amend any of your existing policies that you have in place currently. Finally, employers should prepare for and be aware of any employee morale issues that might come up. Making yourself available to your employees and considering other options such as adding an employee assistance program for your employees should be something to consider and to think about moving forward. Now, also included in the return to work packet will be several sample policies and notices that you can use in the return to work process. Some of these policies include an FMLA leave expansion and emergency paid leave policy, which is designed to explain the eligibility, the rules, and benefits of the paid leave policies. We also have a social distancing policy, which is extremely important to put in place right now, and I can't stress that enough. This policy is really just a sample and can certainly be amended based on what your needs and requirements are, but putting a policy in place to explain the social distancing requirements will certainly help to stop the spread of COVID and also put your employees at ease that there is a plan in place. You also are going to find a temporary telecommuting policy that reviews the requirements around working from home during this time. It's important to set these parameters from the beginning that this is a temporary setup and that there are rules that should be followed. In the event that an employee comes down with COVID-19 in the future, which is a distinct possibility, you'll need a process to notify the employees of the exposure and explain what measures will be taken. This can be communicated with the notice of workplace exposure to communicable disease and will help to contain the spread. This will also provide the necessary information that employees need to care for their own health. Again, these are things to put in place so that employees know what to do should the situation arise, and also all this communication puts them at ease as well. The notice of recall is a sample communication that employers can use to send to their employees as they begin their employment recall procedures. And as we've discussed, it's possible that you may see a wave of PTO, vacation requests that come in from employees that are looking to take some time off. Or if employees get sick, you need to take time off due to that. Again, a clear policy, reminder, and request process should be sent to employees so that you don't get caught off guard by any of those requests. So this last page with respect to returning to work is really showing you what the return to work section of the Prestige website will look like. As you can see, there is a button that you can click that will take you to the return to work checklist. The checklist will also include links for policies that you see right below that checklist bar. So the idea here is that if you take your checklist, download it, save it to your computer, it's going to have those links. It's going to direct you to the website and where these policies and notices are, so you're always going to have them at your fingertips. Or again, you can access and download these policies and notices just by visiting this page and clicking on the policies and notices. They're definitely links that'll take you to the actual documents. So I do hope everyone visits the website and takes advantage of the process and documents and plan that we put together for everyone. Of course, there's going to be a need for further discussions on how to put everything together, and that's really what we're here for. I know Andy mentions it a lot. We talk about it quite a bit during these webinars, but it's one of the main benefits of being with PEO is to have that expertise behind the scenes to help you work through these types of situations. We can provide those best practices and that guidance to help steer you in the right direction. So as we wrap up the webinar, there are a couple things I wanted to go over with you. As I mentioned earlier, today's presentation will be posted in our COVID-19 Resource Center located in our website. The link you can see on the slide right here. We'll also continue to provide you with COVID-19 email updates. We're going to deploy our next update, our next client communication later on this week. I'd also like you to stay tuned for next week's webinars, which is going to be a how-to guide you through completing the loan worksheet. So this is going to be continuing. We're going to help support you as we go through this process and as we've done for the past few months. So again, as I always mention, please rely on your Prestige support staff to help you through this. We are here to help you out. The Prestige Go mobile app will take you directly to your dedicated support team. And again, our COVID-19 Resource Center has all of this information. The recording will be up there, as well as a wealth of information. So thank you, everybody, for taking some time out today to spend with us for this webinar, and I look forward to speaking with you all again soon.